Hello friends, Nalinakshi Swami here. After gapping down, all traders will have in mind actually. See, I'm in a 3-minute chart. So after gapping down, and when it hit the level of 895, the price started moving up. And by seeing the two candles, green candles, the people will think it may go up. People usually, they don't wait for the ranges to form and they want to jump into the trade. So it will go up, and also they will start taking the downwards movement, put also. But what happens, you should never jump into the trade. You should allow the market to settle down. Settle down means it has to form a range. Actually, here you can see after gapping down, it made a lower low and made an high. First made an high. This is the high of 15,942 and made a low of 15,877. And it rallied up to the same level, 15,941. I'm placing the cursor there, 940.40, and this was the high, 939.0. So it made an higher high. So it made a and after making the high, it closed below that. It closed below that, and it gave a signal that a range, double top range has been formed. Double top has been formed. So you mark the level, you mark this level as a the range high, and you forget about this. So range low is this one. Your range low is, so range has been formed into the market. So if you are a seasoned trader, you can make out that Nifty, after hitting this level, it is closing below the 931, whereas this close is 900 and what is this close? 936. The close is lower high. It created a lower high. So again, you mark another level, and you should wait. Actually, in this range, you have to see the price action. If you see the price action, to trap that, there is higher low, and as higher low is formed, but lower high is formed. That itself is the indication that price is not going to go up. In the range, you are seeing this type of change in behavior. What is the change in behavior? Higher low and lower high. This should not be. If higher low has been formed, it has to form a higher high. Higher high. Then range will expand to the upside. So you have got the confirmation. So now decision is what you have to be. You have to be on the sell side. So you can select the 15,900 put option. I'm showing it to you, 15,900 put option. Same time. What is the time? 10:06. Here, 10:06. 10:06, and high has been marked. You mark there. 10:06, you mark. High has been marked, but it is closed below that. So if you go to the put option around that time, after confirmation, Alt V. So high has been marked, and this was the low of around 176, and it closed around 183. So what is the average price of this? I'm not able to take, yeah. This average price is in between prices 180.56. So you mark this 180.56. So range has been confirmed, and this range has been confirmed, and you should wait for the price action on the Nifty to form a lower high. Lower high has been formed at 11 p.m. So around 11 p.m. you are going to take the trade. So you initiated the trade around 11 p.m. Around 11 p.m. this was the price 186, and you can take the trade by seeing this. Around this, any price you have taken, say for example, even you have taken at 192 here, because there will be a lot of volatility, you can go on immediately. You need not take all lots settled together. Suppose if you are trading in multiple lots, you can accumulate the price. Now in Zerodha, they have given this also. What is that? Iceberg order also. Iceberg order, you can break up the levels and you can apply that. And what will be your stop loss? This is your stop loss. If you know the concept, this is the thing, what is happening in the market, you can enter early by keeping the stop loss. You will not be under any panic. So because this is the last 177 is your this thing. So if you have taken only one lot, suppose if it comes and hits here 182, you have entered at some 185 or 196 or something, even your stop loss is only 5 points. So your risk is only 250 rupees. 250 rupees is your risk. For the 250 rupees risk, you have to get 1:3. What is the risk? 15 rupees at least you have to target. So you have entered at 186, then your stop loss is 186 rupees stop loss, 18 rupees you want to get. So 186 plus 18, 196 plus 196, 204, that is enough. 204 is your target. You can make it as a 204. Suppose if the trend goes according to you, see, in the market, it started breaking down the range of 15,878 around 11:06 p.m., 11:06 a.m. See, you took the trade at 11:05, 11:06. It was the range breakout. Okay, the range breakout. Here is the range breakout. So when you see the range breakout, you can hold the trade. See, after the range breakout, it appreciated up to 236. 236. So like that, you can monitor your trade in options also, premium. See, by seeing the Nifty, this level, by seeing the Nifty levels, marking the levels and seeing these are the levels at that price, time also lapsed, no? So premium will also be, there will be decay in the premium. So in that way, you can, by seeing the chart, by marking the levels and by keeping the proper stop loss, if you have a correct vision, then you will not panic in the whipsaws. Actually, in the live market, option premiums will whipsaw like anything. It will go 3 points up, 3 points down. It will be there, and many people, they will panic and they will get out of the trade because they are entering by not. Randomly they are entering. They are not forming any idea or anything. They are entering. Suppose let me make it to a line chart here, and this is the range breakout. This is the range breakout. So if you consider this as a range, your target to be 1:2. 1:2. Sometimes it will give more also. You can trail your stop loss, you can hold it also. See, 1:2 is the target, you will get 239 points. So you can fix your levels, and you can place an order and keep. See, it gave 1:3 also. 1:3, 1:4, it went up to 266, and then it went up to 287. So if you would have bought at 183, so 100% you would have got. For the 5 rupees stop loss, you could have gained. Suppose if you would have purchased one lot for 5 rupees stop loss, 250 rupees stop loss, if you would have held, so 100 into 50, you would have made how much? 5,000 rupees per lot you could have made. Easily you could have made. Or for this level itself, you are getting 186 plus 36, 14 plus 50 points, 2,500 you would have made. Suppose if you would have traded, imagine many traders, they trade in 1,000 lots, 500 lots, like that. That's how they show it to you on YouTube, that they are making a lot of money. And with conviction, if you trade, you can do that. And also there is one indicator. I don't know how to use it, but you can use it as a guidance. See, this is an accumulation and distribution, this one. And this indicator is going up. See, it is in confluence with the price action. So after the accumulation phase, this is the range. Here breakout is taking place. So it is a late it is showing. Indicators are very late. Okay, friends, I think this will help you. Always wait for the range to form, because why range has to be formed means after a huge gap down, the buyers and sellers has to be engaged. When buyers and sellers have engaged, and whether the buyers are trapped or the sellers are trapped, then the range breakdown will or breaking above will take place, breakout will take place. So then your trade will become successful. So you apply in any chart, apply in any stock or anything, you wait for the range, and then you see for the range breakdown, and you go short or go long. Suppose same thing, I'll tell you same thing with the same example. On the day, Nifty went huge up. It made a huge up. See, if you would have, immediately it made a high of this one, and it started going sideways. So price started going sideways, and it formed the range. This is the range. And if you carefully observe this range, I'll take one box. And in this range, double tops are formed, and the price, when it came down, it engaged the sellers, but it could not come down to this level. It could not manipulate this level. It could not come down to this level. And I'll go to line chart. Even the range can also be monitored. And here you can see the breakout of this range. Here, breakout of the range towards the upside. When you see breakout of the range to the upside, same correspondingly you mark on a whichever the call option you want to take. You can go for the 15,900 call option, and you mark for the range and mark for the levels, and this will be the lower level for the call option. And this becomes your stop loss. Stop loss, keep that as a stop loss. First, you take a single lot as your position, and then you can add. So this was a huge move upside. If by keeping this as stop loss, you can trade actually. You can anticipate. Nobody would have anticipated this much big move on that day. After moving to this level, it started going sideways. See, it engaged so many. Actually, it made so many ranges going up. Price whipsawed like anything, actually. Price whipsawed like anything. And then there was a momentum, final takeoff, and it ended at the top of this level. Even on the any day, if you follow the same rule, see, yesterday also, it went up, it made an high, and it made a low. This is the range. Range has been defined around 10:20 a.m. and that means 1 hour range has been defined. So after that you can see double tops over here, lower ranges, lower highs, lower high. So confirmed this one is when the Nifty went there and it is within the range. The trade is within the range here. This was the confirm higher low, lower high. This is the change in behavior. You can make out higher low, lower high. So that itself indicates that price is not going to go up. So then you could have taken short trade. What is that? You could have engaged 16,400 put and mark the levels on the time frame is 12 o'clock. It started breaking down. It confirmedly took the breakdown. So if you would have gone short, so what is your anticipation? So you have to anticipate this range, equal measured move of this range. So this is your target, 16,176. You can anticipate, or you can book a little bit higher than that to be on safer side. Because don't never lose money in the market if you are on safer side. So any day, if you follow the same rule, allow the market to form the range. Allow the market to engage the buyers and sellers. Why buyers and sellers will be engaged in the first hour of the market? Because there will be so many types of traders will come into the market. Say new buyers will come, new sellers will enter, and BTS traders will be there. They have to be engaged. They have to come out of that. Once their orders have been finished, then a range confirmation will take place and the direction will be given to the market. Once you get the direction, trade in the range. Sometimes what happens here is another type of trade. I'll show it to you. What if? See, this is the another type of trade. See, in this on the 13th, so market gapped up. Let me go to 15 minutes. This was the 15 minutes. There was no low. This was the range actually. From this to this was the range. Previous day, you have to consider. It gapped up from this to this, it gapped up. So it as if it showed it is the breakout of the range. This is a huge range. Then no equal lows are formed. So it went up to this level and market sold off so immediately. For that, how to make out? So go to the lower time frame. If you think it is going to facing resistance, you will come to know. Okay, facing resistance, you will come to know. See, this is the high of the range. On that particular day, this was the low of the range, right? You mark this. The range has been marked. So this type of movement, you should never enter. The reversal will come actually. In the, you're thinking that it is a range breakdown, breakout, people will get stopped out. Many people will get stopped out because they will not be able to read that. So if you go there on the, you should wait actually. You should wait. Go to higher time frame. You have to go to the higher time frame. See, when you see here, it is marking lower high, higher high, right? But there are no lower lows. Here, after this candle, it is showing, sometimes always you will not get a clear picture, but if you are experienced, you can make out this price is not going to go. So, okay friends, this will help you to understand how to trade. Thank you very much. Nalinakshi Swami signing off.